Welcome to Institutional FX Uncensored, your free weekly FX podcast. Listen to professional FX traders, currency hedge funds, and FX brokers from around the globe discussing the latest FX news, trends, and regulations. Be ready to navigate through the uncharted waters of the foreign exchange market like no one else has. Tune in.
Hi, everyone from around the world, and welcome to the Institutional FX Uncensored podcast. Today it's me, Natallia Hunik, and it's my great pleasure to introduce my guest, Ricardo Evangelista, who is the CEO of ActivTrades Europe. And today we'll talk about the European brokerage houses and how they're able to operate and grow in a strict regulatory environment that only becomes stricter, and how do they navigate the ever-changing landscape. And also we'll talk about how European clients perhaps differ from the rest of the world. So today, Ricardo, welcome. I'm happy to host you at my podcast, and we just had a chat about myself last week, so we keep this thing rolling.
Thank you very much for the invite, Natalia. It's a great pleasure to be here with you.
Great. Thank you so much for coming over. So let's start with maybe talking a little bit about yourself. I know you've spent a significant amount of time in the FX industry, in the FX brokerage industry in particular, and eventually became the CEO of ActivTrades Europe. Was that a goal for you? Did you always want to be the CEO of FX brokerage? What made you also decide to stay in the space for such a long time?
Well, I confess that being a CEO has never been something of a priority to me. So if you'd asked me 5 years ago, I wouldn't have said, "Oh yes, in 5 years I'm looking to be CEO of the firm's subsidiary in the EU." What made me stay, and how did I get here? Okay, so back in 2008, I joined GFT Global Markets. That was my first step in the financial services industry, and I confess that it was a big shock for me. So previously, I'd been working in IT sales, and joining the sales team, dealing mainly with retail clients at GFT, was a big shock. It was a high pressure environment. There were aggressive targets, aggressive leadership. Let's call it that. So it was very tough. At the same time, that coincided with a turbulent period in my personal life. So I would say maybe for 2 to 3 years, my goal really was to stay afloat. To hit targets, to not get fired, to make as much money as possible, and to sort myself out as an individual to some extent. Then about 10 years ago, I joined ActivTrades, and it was a massive change. So the atmosphere was considerably more positive. There was less pressure. The greatest focus was on the quality of service. And that really helped me out. So I started to emerge from these clouds where I'd been for a few years, and then I started to have goals. But my goals have always been short to medium term. I mean, we're all different, and to some people out there, this may sound a little bit bizarre. How come this guy is here talking that he doesn't have long-term goals? Of course, I have some long-term goals. But they're more at a personal level. In terms of professional life, I find that I work better when I have short to medium term roles, when I'm working on projects, if you want, and I know exactly what is expected from me. So I ended up staying in the industry because ActivTrades gave me that good fit to who I am and to my characteristics as a person. So there were loads of projects that I embraced and gave my best. Things with some ups and downs, things overall worked out well, and the scope of the projects just kept increasing, and until in 2016, I was asked to set up the firm's office in Dubai, It was a branch office in Dubai, so I spent 18 months in Dubai. That went well as well. So with the Brexit looming in the horizon and the need to set up a subsidiary in the EU in order not to lose access to EU-based clients, I was asked to help with that, and that's how it worked. So here I am. So yeah.
Great. That was a very humble answer about being the CEO. I like that.
Well, it's honest. It was the honest answer.
Sounds like you're a very humble person. Interesting point about the GFT bootcamp. I mean, I'm not the first person I know from the industry who kind of started in that type of environment. There's a lot of folks around spread out across the industry from, for example, FXCM that could probably share a lot of what you described. But somehow, it gets people addicted to that adrenaline. And even though it is a high stress environment, and I know what you're talking about, I've been through the technology startup myself, and I know it's a lot of stress.
Yeah, it is. I mean, it was those were difficult times, but also interesting times, as you said. And there is always a side of us that likes that adrenaline and that challenge, especially when things go well. Then it can be really rewarding. But I think that time may also be somehow in the past because of the evolution in the regulatory environment, and now there's less scope for that
less scope for that type of boiler room style.
Exactly.
Cool. So Ricardo, you mentioned, I mean, you've spent a lot of time at ActivTrades. I think it's 10 years, right? Am I correct? 10 or 11 years?
Yes, that's right. 10.
That's a long time for a FX broker. Like if I look in, especially you in London, and if I look, I periodically look at resumes for people who are applying for various jobs in London, their average stay at the job. And I think it's not only indicative of in general FX, but maybe it is a generational thing, and also the evolved culture, the working culture, but it's, typically like 2-3 years. And I get asked that question a lot myself at Advanced Markets. What makes you stay, and what makes the key employees stay with the company for such a long time? What are your, what are your thoughts? Like, what does ActivTrade do to retain its top talent? And given that there is such a high mobility in the FX sector, but also in the business in general.
I think the main factor is probably the culture of the company and the atmosphere created by the people who are already there. So the circumstances, from where I see it, are very particular in the sense that ActivTrades, although ActivTrades PLC is a British firm, is based in London, the very large majority of us are not British. We are mainly European. So that in itself creates a sense of family that helps us to stay. I mean, it's not really a family; it's still business. But
your family hasn't had Brexit.
Yeah, so it creates this natural affinity with your colleagues that stretches beyond the mere professional, if you want. So there's that, and then there's the culture of the firm itself, where it's very much based on problem solving and on values of integrity, of honesty, of transparency. I know this sounds fanciful and slightly over the top, but it is true. Actually, it's written everywhere in the office. The mission statement and the values of the firm. So those are values I identify with as well. And perhaps just bringing in what I mentioned earlier about my traumatic years working for a more boiler room approach type of broker, make my time at ActivTrades compare very favorably. So that also contributed to stay. So there's always a number of factors, but I would say that that's almost family-like aspect of being a foreigner together with your foreign colleagues creates a strong link to the firm. The values of the firm, if you identify with those values, it makes it easier stay. The success of the firm, of course, and the growth has been a massive factor too, because without success and without growth, there are no opportunities. And if I hadn't had opportunities to grow within, I probably would have looked for opportunities elsewhere. So that's also a big factor. So these four probably, the family side, the growth and success of the firm, the values, and my traumatic experience beforehand.
I think
it's
that's
just
very
the background to. No,
Yeah.
absolutely. I think
It's perspective. It's all a matter of perspective of how you look at things, right? If you haven't had that experience, perhaps you would have looked at the environment and active trades differently.
No, absolutely. I think loads of our colleagues in the FX space, they jump from one job to the other. They spend maybe a year or even less, or maybe 2 years, and then move on. But maybe they don't get to fit in as well, and they just keep looking for that better fit. Or maybe they haven't had any bad experiences in the past that create, as you said, the perspective and make them value what they have. So it could be that in this industry, yes. And also the type of characters that it sometimes attracts, because it tends to attract as well some very ambitious, very driven individuals that have no time to waste and just want to move on to the next project. And if wherever they are, they feel that they are not finding the space to channel that energy, the natural option is to leave, I suppose.
Right. Yeah, it's a very interesting. Do you think overall, though, I mean, a lot of people in the industry, just kind of that experience that you had in your first job, as I mentioned, can share the experience, similar experiences. And for some, it gave them an impetus to perform better and stay in the space and find a better place and a better company. But for the other ones, it causes a great degree of disappointment, especially if you go one place, second place, and you still kind of face the same type of practices. I thought that it was very interesting that you mentioned that with the regulation and the other things that have changed in the sector, that perhaps the industry culture has changed as well. Could you, do you witness that? Do you think that the culture has changed for the better overall? I mean, at least maybe in London and Europe in general?
Yes, I think so. I think the regulatory changes that we've experienced, and they created a more controlled environment. It used to be more of a bit of a Wild West type of scenario where people would say anything. Hey, what do you mean? You don't want to open an account? You don't want to be a millionaire? That sort of approach. You could not get away with that nowadays, and that's definitely a good thing. I think overall this improvement in practices is very positive for the industry. The industry for some time had a little bit of a reputation, I would say, and that wasn't always deserved, but in some cases was. And I think this in the improvement in practices, the improvement in the way customers are treated, and the way brokers now have to work in order to be successful, which is much more positive. And this helps our industry as a whole to acquire a more positive aura, if you want, and it will be helpful in the long term. It also helps to separate the good from the bad. So just like anywhere else, you have players that offer a better, more positive package, and others that maybe try to bank on underhand tactics and take advantage of less informed clients or put pressure on clients. So by having this regulation in place, you can almost distinguish the two sides by pinpointing them on the map. So geography starts playing a role when it comes to deciding who you're going to go with. So if you find a broker that is located in a jurisdiction that doesn't offer any warranties in terms of protection of clients, then that should be a warning. So I think overall it's been good, and it's great that that more aggressive approach is now part of the past, at least in the better regulated jurisdictions.
I agree. Let's hope it continues on that way, that advancement and the culture and in general, the ethical standards in the industry, of course, driven by the regulation. I'm sure you can resonate with that as well. Would also love to see some sort of ethical code from within the industry that everyone abides by. And I know there's been efforts with the FX Global Code of Conduct to do that.
Mm-hmm.
Hopefully those efforts will continue on.
Yes, I agree. Yes, I hope so.
Right. And Ricardo, let's talk about the marketing for retail FX brokers. What type work best for retail operations? And recently, actually, a couple recent developments. So one is Google restrictions on censoring FX advertisers. I'm sure you're aware in Google now, censors on top of regulator. Actually, you have to go through the separate verification process to make sure that you are licensed and you can target the audience in the jurisdiction that you select. And another question I wanted to ask you about is also just recently, I think yesterday in the news, Google announced that some phenomenal numbers for their advertising unit, which is obviously the lifeblood of the company. I haven't had a chance to look at the breakdown of what's been driving the growth for Google, but I was wondering if perhaps from your experience with ActivTrades, if you, given COVID and all the restrictions and the lack of events and in-person meetings, the brokers started spending more on online ads.
Yes, I mean, look, definitely. I think you asked me what is the best channel, what works better for retail brokers. I mean, it clearly still is PPC, pay per click. It's still king. It's still the best option. But I don't think we can just single one course of action as being ideal for the entire community. So there's different operators out there with different propositions. So different channels will work better for different providers. So say a broker that is more focused on providing good quality educational resources, for example, may benefit better from a different approach than one that focuses solely, say, on very low spreads or on very low commissions, for example. So it's different types of channels, different types of propositions, but overall the PPC. On the subject of Google and their new restrictions and the hurdles they put up that make it the process of advertising with them more difficult to manage. I think that's actually a positive. That's a good thing. It is true that it's painfully hard to promote, say, a YouTube video, but I think overall that's a good thing. And once again, playing back to that same key we were hitting earlier of there being good and bad operators in the market, I think that also helps to protect the consumer against less honest providers. Once again, that rhetoric of who wants to be a millionaire. Hopefully that will be filtered out, and these new restrictions will help. But yes, I mean, Google remains, and advertising in general remains the best course of action, the best channel. And yes, it was incredible to see the results of Google yesterday. Their profits are just incredible, and I think that's a product of the times we're living through as well. The pandemic is fizzling out, but there's still some of the effects are still here. There's still a lot of people working from home. Many of the things that we used to do pre-2020, many of us are not yet doing them. So we're spending more time at home, and we're maintaining some of the habits acquired during lockdowns. This means that some industries are naturally better positioned to take advantage of this. So online advertising is definitely one of those industries. And so it doesn't surprise me at all to see that yesterday, or the day before yesterday, when the results for Alphabet, so the parent company of Google, Apple, and Microsoft came out. Between them, they have almost $60 billion profit in the second quarter of the year, which is incredible. We're talking about profit, not turnover, is profit. So it's absolutely amazing, and it shows that in the times we're living through, online advertising is still the king.
Right. Yeah, absolutely. I mean, the numbers are just absolutely stunning, and that made me wonder. I thought in the beginning of pandemic, a lot of businesses, or perhaps it was brick and mortar businesses, they suffered and stopped online ads. And it looks like, if you look at the result that was announced recently, it really is the growth is unbelievable. And I also have a chart here on the screen. I'm sure you saw that. And for people who are listening, this chart's just, it's a bit dated. The data that I was sourcing is actually from 2014. And I have here just various big brokerage names and a percentage advertising spend as a percentage of their revenue. And plus 500 comes here at the top with more than 30% of their revenue top line being spent on marketing and advertising. With the average, if you average it out between all those brokers, and there's a representation here from everywhere, from the US with the Gain Capital being a public company here, and FXCM used to be, Japan, Saxo Bank over in Scandinavia, XTB is the Polish brokerage, and CMC and plus 500 the UK ones. The average spend is 14%. What do you think of that number, Ricardo? Does it still holds true, or in 5 years that have passed since these numbers have been taken, do you think that spend on online, well, I guess in the context of FX brokers, it's pretty much for the most part online, because the operation is natively digital for most of the retail brokers. Do you think that number still holds at 14%? Is it higher? Is it lower? What are your thoughts?
I think it will vary. I think for many players out there, it will be higher. I know that some of our peers have been investing more than they used to. We certainly have as well. But I think it varies. It varies. It won't be higher for everybody. Some will, would have had different approaches, but for us, definitely has gone up, and I think for most of our peers, it has gone up as well.
Mm-hmm. Yeah, it's obviously I guess the growth that's driving it, and you mentioned that PPC remains the number one lead generator and traffic generator for retail FX brokers. However, if you look at the regulatory environment, particularly in the EU with the introduction of ESMA 2 rules, there's been deleveraging, and as a result, we've seen this big move of most of the brand names in the FX space offshore. Driven again by deleveraging, by the fact that the clients are not happy with the 30-to-1 leverage. I think it's 30-to-1, right, in the EU for retail.
Yes. On major currency, yeah.
Right, on major FX pairs, and as a result, you see brokers setting up operations offshore. With the Google censoring, what do you think is the future? How do you think the cards will play out in this scenario if Google on one side is censoring the advertising and saying that in order to target people from this area, you have to have a license, but on the other side, the brokerage world kind of has been moving actively over the last 4 years, or maybe even longer, to the offshore jurisdictions.
Yeah, so as I was saying, I think it depends on the specificities of each broker. So, for example, for ActivTrades, the most important markets would remain European markets. And our European clients remain in Europe. We don't, unless they specifically ask to be onboarded elsewhere, they remain in Europe. Also, we find that for our European clients, the reduction in leverage is actually not such a big deal. For some is, but generally speaking, is not such a big deal. It's okay. However, we find that for other geographical areas in the planet, that is more of a big deal. So, for example, in South America or in Asia, the reduction in leverage is more of a big deal. So you need to have, as you said, because of the complicated balancing game between having an offshore operation and the impact that's going to have on your ability to advertise to your clients, in opposite to remaining in Europe. So for us, we find that our European clients are quite happy to stay in Europe. They're not that put off by the changes in the maximum leverage that they can use. And we can still use pay-per-click in Europe. Elsewhere, you need to adopt a different strategy. So you need to work more with partners. You need to have more aggressive partnership programs. You need to provide more education. You need to be more hands-on. You can't just rely on advertising. So it's more based on relationships. So this is why I was saying that depending on what type of broker you are and depending on your strategy, advertising will still be a good channel, but it may also be secondary in comparison to other strategies, like developing a very aggressive partnership program in terms of affiliates, of IBs, etc. So I think we have to try to balance this game between catering for clients outside of Europe that want more leverage and still being able to get our name out there by using other approaches that don't rely so heavily on advertising and go more along the path of partnerships.
Right. And another interesting piece of news, which also kind of came across my desk yesterday, and that has to do with Google and the way they classify, what we do, margin effects, is essentially a complex financial product. There is now in certain jurisdiction a surcharge being added for like 2%, 5%, depending on the country. Like in Turkey, it's 5%, for example, regulatory operating costs being added on top of your ad placement spending. And I guess that's driven by the fact that now Google has to essentially have an internal team of people who are overviewing the online ad space for the financial products and making sure everyone stays in line. I would imagine that probably costs them some effort as well internally on their side, because there's probably a team of compliance people who now have to review these applications.
Yes, I mean, look, you just don't expect Google to put prices down, do you? I mean, it's not prices will not come down. But saying that on a more serious note, no, of course it makes sense. The landscape is evolving towards greater restrictions. Managing those restrictions in order to still be able to utilize the channels comes with an added cost. So it makes sense that you have to pay that cost. Once again, you have to look at the two sides of the equation there and decide if advertising is really the best strategy or not for a given location, for a territory. If it's not, if the price is just too high in terms of the returns it generates, then just try different approaches.
It's interesting that our discussion about pricing and the pricing pressure for the advertisement and placement, it nicely dovetails into my next question about the competition, because obviously everyone now has to bear a higher cost in terms of compliance, regulatory oversight, and even paying more for advertising on Google and going through a lot more scrutiny to be able to advertise on Google network. And that, the point of the competition amongst the retail brokers, how is it? Is it fierce? Is it tense? What are the main differentiators? How do you guys compete against each other? Do you conduct competitive analysis on a periodic basis to see where you should change your perhaps value proposition, change your commercials, change your pricing politics? How often do you do that? And what's the competition landscape in general looking like? And where you operate, which I assume from what you just said, that the main market remains the European Union.
Yes, no, of course we do competitive analysis. We look at a number of things. In fact, on the website, when we provide our costs, we also, alongside our costs, we provide our competitors, or some of our competitors' costs as well. So we do competitive analysis in real time, all the time, for the major instruments. Of course, there's more into competitive analysis than just looking at your competitors' prices. So we do constantly look, maybe not in such a formal way, in such a standardized way, but we do frequently, or all the time. We are always looking over our shoulder, see what's happening around, and we look at the way our peers advertise, the way they structure their website, for example. I mean, it's ongoing. But saying this, I think that's the most important, perhaps nowadays, the most important driver of success for a broker is innovation. And innovation is something that doesn't rely so much on looking at your peers. It still relies on looking at your peers and finding out what's missing or how you can improve what's already around. But it relies mainly on focusing on your own resources. So I think that having, and we've had a conversation along these lines a while back, focusing on other aspects that stretch beyond the traditional sphere of what the broker had, which was marketing, basically, selling itself as a provider of a service. That was the main strategy. I think nowadays successful brokers need to enhance that, and they need to stretch beyond that sphere and be also a technology company, innovate, offer new products, offer develop technology. And also be a financial company, in the true sense of the word, be able to provide efficient ways for clients to move money around, being able to provide payment cards, having client portals that allow a client to manage a number of things as being part of an ecosystem. This is extremely important nowadays. So I think that competitive analysis still plays a very important role. We do it, some aspects of it, all the time, in real time. Some other aspects we do it in a less structured way, but we're always talking about what our competitors do, of course. But our main focus is in innovation and in the development of our own products and the creation of new services.
A very good answer, Ricardo. How about, so you mentioned about the price competition and how you kind of give that a preview for the client on your website about how you stack up against the major competitors in the space, especially with you being a European broker with mainly targeting European audience. Does the client still go by the price? Is that the major criterion when they're selecting a broker, or what are other differentiators that you put in place to attract the high quality clients in Europe? I mean, are there more things that they look at rather than just a tight spread and a super or no commission or just the commercial terms?
Yes. Look, price is important, but it's not the most important. It's interesting because price is a very tangible measurement. So you can very easily compare yourself against others by telling this is how much we charge. But of course, that is not the main or the most important factor when it comes to clients deciding who they're going to choose as a service provider. I think that customer service is very important. The level of customer service is very important. The technology is very important, the platform. But above all, it's the confidence that the client feels in the provider. It's the credibility that the provider is able to project that plays the main role. So being trustworthy and being safe. So we don't rely just on low spreads. We rely on things like client money insurance, for example. So which stretches well beyond the financial services compensation scheme, for example. So we offer up to 1 million, and we can offer more.
I saw that I saw that, and I thought that's a great thing because I saw like up to 1 million with Lloyd's Bank, the insurance that you guys got. That's a huge differentiator in my opinion. I don't know if the retail clients treat it that way, but I think that's
for good clients. For good clients, it's a great differentiator, as you said. I mean, there's other things to having good customer service. Being generous with your clients as well is very important, and being present. I mean, obviously, when you have, say, 60,000 clients, you can't go and meet them all. But if you visiting their country, go and meet some of your, some of the clients that you feel closer to. Go and meet them, have lunch with them, stay in touch, because they will be the best your champions out there in the market. They will be the ones that will enhance your reputation. So we were talking about competitive analysis, and an analysis that we like doing is finding out how new business gets to us. How did people, how did they hear about us? Why did they come to us? And we find that almost 50% of our new clients come to us because of our reputation. And the referral, the most common referral is word of mouth. So this is very important, and certainly more important than comparing prices. Not as easy as comparing prices, because these are intangibles that we're talking about to some degree, but very important.
Yeah, it takes years to build that reputation. It's easy to launch a brokerage and start lowballing the price, but it's much harder to build a solid track record in the industry.
Exactly. Yes.
Great, Ricardo. I think we're taking about 40 minutes of great discussion. Thank you so much for coming over and providing such thoughtful and tangible answers with the really tangible numbers. I think it's going to help a lot of people who are contemplating starting a brokerage, or perhaps are running one and looking at what to improve within their operation. I really enjoyed the discussion, and thank you so much for coming over.
It was my pleasure, Natallia. Thank you very much for having me. I enjoyed that chat as well.
Great. Thank you very much. Any views or opinions presented on this podcast are solely those of the author and do not represent those of Advanced Markets. Trading foreign exchange or other financial instruments on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or more of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from your broker or an independent financial advisor if you have any doubts. Anyone opening a live trading account needs to adhere to the laws of their local country, as such laws may differ from country to country. Advanced Markets expressly disclaims any liability for any lost principal or profits without limitation, which may arise directly or indirectly from the use of reliance on information provided through this podcast.